Hello to all traders and welcome back to another market review brought to you by Orbex. So where can we start with the Fed? Not only was the 25 basis point rate cut expected by the markets, but what wasn't expected was the Fed's economic projections into next year, which shows only a possible two rate cuts being applied. And it's quite an astonishing move because we were expecting at least 4 or 5 rate cuts to try and bring it down to the level before the pandemic. Okay, not to 0.25%, but at least to probably 2 or 3%. But that's probably not going to happen now. So we have had 1 full percentage point since the Fed did stop raising rates, which is something to be optimistic about. But with high inflation expected next year and obviously GDP not going in the direction that we want it to, we saw a vast sell-off in stocks and it was shown on the indices. What's most worrying is the Dow that we've got on the screen at the moment. It had a 10th straight losing day streak, the first time since 1974. So it is actually quite significant, quite a big move in the market. And where do we go from here? Well, let's just take a look at how detrimental this is. You know, we are now looking at the previous levels of just below 42,000. This is where the Fed is pushing the Dow, just 500 points shy of that. But if we take a look at the peak above 45,000, if we think that we are now trading over 2,000 points below that in just 10 days, it is quite significant. And with the RSI vastly oversold, can we see more of a slight uptick in price action? Can the indicators start moving any lower? We'll have to wait and see, but it is actually quite disturbing and quite worrying. And Donald Trump will have quite a lot on his hands when he gets into the office. S&P as well, look at that dive down, you know, trading just over 6,000 before the decision and now trading just below 5,900. So a couple of hundred points deducted there. But is it something to worry about in the market? There is a big panic mode at the moment in the market, but we are certainly seeing more of a dive lower in the near term. And let's just take a look on the NASDAQ finally before we end today's market review. And again, more of the same, but as I said, what's worrying is the course of action. Now we've got GDP data that could be a bit lowered. The ripple effects of yesterday's news could actually keep on moving price action lower. So we are seeing this across the board. Good day for the dollar though. We had the dollar index closing on a 2-year high. We had euro dollar pair drop over $100 in favor of the dollar, and across the board the dollar was in favor of a big movement against sterling, against the yen, against the big competitors in the market. So this is something to keep an eye out for as well. So as I said, just keep an eye on the fundamentals really driving at the moment. We've got a little bit more of headline news. We've got Bank of England interest rate decision and the Bank of Japan interest rate decision. They're not expected to change any of their monetary policy at the moment. But the problem is we've got GDP growth rate Q on Q, quarter final, and this could actually, you know, start shaking the markets up even further. So, you know, not too much. Tomorrow we've got PCE data as well, personal income and personal spending. So that could actually have more of a detrimental effect because markets have slid so much. However, we'll bring you all the latest in the technicals and fundamentals and the big news, big movements in the market. So stick with us, stay ahead, trade responsibly, and we'll speak again next time. Bye for now.